The forex strategy that I use is built on two concepts. The first is the concept of supply and demand, and secondly is the concept of liquidity. For you to understand these two concepts, you simply need to be able to understand price cycle. Price cycle is simply a set of 4 phases in which price repeats in cycle. What this means is that there are 4 phases in the market in which price is going to always repeat in cycle. I'm going to explain this in this video shortly. For you to understand what price cycle is, you need to understand what supply and demand zones are. A supply and demand zones are simply zones where you want to take action from. For instance, a supply is simply a zone where there's a large number of sales orders that need to be triggered into the market. A demand zone, on the other hand, is simply a point where there's a large number of buy orders that need to be triggered into the market. The difference between supply and demand zone is that one is asking you to buy and the other is asking you to sell. I'm going to explain this while we explain price cycle. But before going to explain price cycle, if you're seeing me for the first time, my name is Divine, and what I basically do on this channel is document how I trade, and as well show you the mindset behind my strategy. If you want to see content like this, I want you to smash the subscribe button. I'll be right back. Price cycle is simply a set of phases in which price repeats in cycle, and those phases are referred to as distribution phase, accumulation phase or resting phase, expansion phase, and retracement phase. Now, these are the phases in which price repeats in cycle, and what this means is that one phase gives birth to the next phase, and the next phase gives birth to the next phase, and the next phase gives birth to the next phase in cycle. It's moving in cycle like this. 1, 2, 3, 4. 1, 2, 3, 4. It's moving in cycle. That's what price cycle tells us. Now, I want you to bear in mind that this cycle or this whole phase gives birth to what we call supply and demand zones, and I'm going to explain for you in this video. The first one is simply refers as distribution phase. Distribution phase is simply the actual move or the right move that price wants to make that respects the trend and is following the trend. That means once you come to the market, you want to be on the right type of distribution phase. You want to be on the market when price is distributing. That's the one you want to look for. And when price is distributing, it always moves in an impulsive move like this. Price is distributing, right? It's moving in an impulsive move. Now, after price has distributed for a long period of time, price tends to go into an accumulation phase or a resting phase. That means price has to rest from this impulsive move, and when it starts resting, it goes into a phase like this. Remember, this is an impulsive move, refers to as distribution phase, and when price has distributed for a long period of time, it goes into a resting phase. This is referred to as the resting phase. Now, the resting phase is simply a point where price wants to take a break from the actual movement that they have made. And in this resting phase, manipulation occurs. There's a lot of confusion, and price is simply making equal highs and equal lows. Price is just perambulating at one spot. It's simply resting. Now, after price has rested for a long period of time, price tends to go into an expansion phase. Now, the expansion phase is simply a phase where price have taken enough rest, and price wants to continue its movement or reverse its movement. For instance, if price is an uptrend impulsively and goes into a resting phase and price expands to the upside, it's a signal that price wants to simply continue the trend. But if price expands to the downside, it's a signal that price wants to reverse its trend. And this is at this point where supply and demand zones are bettered. Now, if price expands to the upside, it simply means that a demand zone has been created at this point here. And this type of demand zone is simply referred to as a rally, a base, and a rally. This is the first type of supply and demand zone we'll have. A rally, a base, and a rally is referred to as a demand zone. Now, let's for instance say if price fails to expand to the upside and expands to the downside, this is referred to as a rally, a base, a drop, a rally, a base, a drop, which is referred to as a supply zone. Now, having understood this now, we want to look at the next phase, which is referred to as retracement phase. Whenever a price expands out of a zone, and this zone becomes a supply zone at this point now, supply, it means that we are expecting price to come back to this zone, and then we're going to sell, because a supply zone is simply a zone where there's a large number of sales orders that need to be triggered into the market. So in this case scenario, one price will trace back into this zone and then sell off. Now, before we confirm if this zone is going to hold, we want to invite the concept of liquidity. I don't want this video to be very long, so I'm going to possibly not talk about concept of liquidity right in this video, but in my next video. What I want you to do is to just subscribe to this channel, like this video, and drop a comment saying whatever you like. Wish me well. Let's continue. When price retraces into this zone, this point becomes a supply zone that price is likely going to use to go to the downside. This is referred to as a rally, a base, a drop, a retracement, and a distribution. Let me recap. This phase is simply referred to as distribution phase, resting phase, expansion, retracement, and continuation of the distribution phase. This is how price cycle work. Let me give you another example. Let's, for instance, you come to the market, you've understood what distribution phase is. Price is distributing to the downside, and after price has distributed to the downside, price then went into a resting phase. Now this is the distribution, this is the resting, and what's going to simply wait for now is for price to either expand to the downside or price to expand to the upside. Let's say in this case, price expands to the downside. Now, price has done the first phase, second phase, third phase, which is what? Distribution, resting, or accumulation, expansion. The next phase you want to wait for now for price to do is to simply retrace back into this zone and then continue the distribution phase again. These are the 4 cycles of the market, and price always moves in this cycle. Now, the concept of liquidity is based that the price has to make a fake move to make the actual move, which all of this liquidity occurs when price is retracing. So it's at this point of retracement that you can be able to understand how price is inducing liquidity and how price is engineering liquidity, and you can take advantage of that. In my next video, I'm going to basically be showing you live example on the chart. I'm going to be going to the chart and be identifying these things step by step on the chart for you to understand how price cycle work and how supply and demand work. Now, if you have any question you want to ask me, or you have any complication about whatever I'm thought in this channel, I'm thought in this particular topic, I want you to put a comment in the comment section. Let me know what is the challenge, and I'm going to respond to you ASAP. But what I want to take home is this: that for every time you open the markets, for every time you come to the charts, your duty is to identify the phase in which price is distributing, price is accumulating, price is expanding, or price is retracing. If you're able to understand how or each phase of this market, you can be able to make an informed decisions in the market, even if it does not happen all the time. That means that time is not going to work, and at times it's going to work, but most of the time it's likely going to work. And even if it does not work when you understand it, it simply means that you know what you're doing in the market, and you want to always stick to what you're doing. Now, the whole point of this video is basically for you to understand price cycle, and I think I've done justice to what price cycle is. Now, let me give you the type of supply and demand. We have 4 types of supply and demand. We have the rally, base, rally. We have the rally, base, drop. We have the drop, base, drop. And we have the drop, base, rally. Now, this type of supply and demand can be acting as a reversal pattern or a continuation pattern. Now, remember in our first explanation where I explained to you what a rally, a base, and a drop is. This is a rally, this is a base, and this is a drop. In this case scenario, this point is simply our point of what? Supply. That means whenever you see a rally base drop, that means rally base drop, this is supply zone. Let me give you an example for demand zone. And whenever you see a drop base rally, this is a drop, a base, a rally. This simply refers as a demand zone. So this place is a demand zone. And I will spell zone again. Demand zone. And when you see a drop, what am I doing again? A drop, base, drop, base, drop. This is referred to as a supply zone. Drop, base, drop, supply zone. And when you see a rally, base, rally, this is referred to as a demand zone. Rally, base, rally. This is referred to as demand zone. So these are basically the 4 types of supply and demand zone which we all know from today or since in this channel. Now in my next video, I'm going to go into explaining the concept of liquidity and how liquidity actually works and how liquidity makes a demand zone to hold and how it makes it to fail. That will be my next video. But I want you to subscribe to the channel, like this video and drop a comment. You'll see me in the next video. Peace.